So that way, if people need to see it back, they can. But super excited to jump on here. Hello to New Zealand. We got New Zealand in the house. Appreciate you guys and all of your dedication for everything that you're doing. You guys are really doing a great job of trading and trying to build and share and really create that culture, that environment. And so we're super proud of you guys. We also know that there's people from other countries who are on the calls as well. And but I've got a special guest who's on here. We've been doing trainings together for the last few months now, myself and Dr. Josh Lee. For those who do not know him, Josh is actually formerly a doctor who's now a full-time trader. And I think that's really important for you guys to understand. This is someone who is already successful. He was a doctor. He is now a full-time trader. We've been trading together for about 5 years. He's phenomenal at what he does. And he actually decided, and the reason why I bring this up a lot is that he actually decided in talking with me a little while back to actually offer the trainings with the team because we felt that the team needed it. We felt that the team needed more. And because Josh and I were having so much success with what we were doing, Josh said, why don't we just offer this to the team? He's not incentivized by it. He doesn't have a team. He just does this. And we're friends. And so I'm grateful to have him as a best friend and as a trading partner as well, and to provide value. So what we're going to do today, guys, I think it's going to be a little bit different than we normally do on our morning sessions USA time. Is we want to be able to share number one concept, but we also want to actually do some live analysis on live charts. So we actually want to show you guys how to actually look for the trades that we ourselves are actually taking and making money on every day, because I can tell you, you can actually do this. And I say can, like C-A-N, you can actually do this. And it is quite simple. It's actually not as hard as you think, especially when you see what it is that we're going to show you today. So what I'm going to do is I'm going to bring on Dr. Josh Lee as a panelist. I'm going to make him the host. I'm actually going to make him a co-host with me here. And what I want you guys to do is go inside the chat, put some fire emojis inside the box for Dr. Josh Lee. I think you guys will see that there's some amazing value and information. Again, this is going to be different than what we do on our morning sessions. I think you guys will definitely like it. So with that, Josh, I'm going to go ahead and turn it over to you.
Excellent. Great to be with you all in New Zealand. You know, back in, I think it was 1999, I had the privilege to go to New Zealand. My father worked with Stephen Covey. I don't know if you've ever heard of him. He wrote the 7 Habits of Highly Effective People, and he traveled the world doing leadership training for corporate executives and people like that. And I had just graduated from high school in 1998. And he said, you know what, I'm going to Australia for a week to do some training there. They were going to do a leadership week. And then I'm going to go to New Zealand as well for an additional week. And so I had the privilege to come and visit you guys there way back then. Boy, it was the time of my life. You can imagine, just as a newly graduated high school student, I was so excited to go out and experience some of the world. And boy, what a beautiful country you have. It was a privilege to be there. So today, because we have a little bit limited time, I wanted to format this just a slightly different than I normally would in our morning training sessions that we do here in the United States. I want to be able to share with you a few basic concepts that will illustrate the power of what we are using, okay? Now, for those of you who may be new, some of this information may feel unfamiliar, and you're going to go, I don't follow all of this exactly, and that's okay. But what I want you to be able to see is the power of the tools that we use and the way that I teach it, so that you can actually make accurate predictions in the market as to what price is going to do next. So I'm going to share my screen with you. And what I've got here, this little image here, this summates the whole of trading. Where will the price go next, right? And so we're making a simple prediction in the markets that price is either going to go up in reference to where we enter a trade, or price is going to go down in reference to where we enter the trade. And so the better we can get at making that prediction in one way or the other, the more money that we can make. Now, the difference between this and gambling is like flipping the coin, pulling the slot machine. You have no idea what's going to happen. It's pure luck, pure chance, and that is not what we're doing with trading. We're using specific tools. Brandon mentioned I'm a doctor. We, in the field of medicine, we use tools all the time. Some of you have been to a doctor's office and they may do a test on you to see if you have strep throat, to see if you've got the flu, to see if you've got a heart condition or something like that. And with all of these tests, they're able to look at specific data to form an interpretation of your body. So similarly with the markets, we have different technical indicators that we then use to make an interpretation of the market. All right. So as we predict which way the price is going, it's not just based on, I think it's going to go up, I think it's going to go down. We're actually going to use some objective data that's not based on our opinion. It's based on actual facts that's going to tell us essentially where the market's going to go next. And even though I can't show you everything on this particular call, I really wanted to at least introduce one of my most favorite concepts, okay, as part of this. Which is known as the relative strength index. Now, these little candlesticks, these green and red candlesticks, that represents price. Price is constantly going up and down, up and down, up and down. If you have a retirement account, chances are you think, well, my money is just slowly growing up over the next 30 years. The reality is it's going up and down all the time. Every moment of the day, your money, the value of your account is going up and down, up and down. And so there's a way that we can read those up and down movements by utilizing many different technical indicators. We're going to focus on the RSI. And the way you read this is when this little line here is above this dash line, which represents 60%. This is a 100-point scale, so you'd see 0% up to 100%. So when that line is above 60%, there's said to be strong upward strength, okay? So this is measuring the relative strength of the price. So if this line is above 60%, it's said to be strong. And what we're likely going to see in the market is an upward directional move in the price. If price is below 40%, we're likely going to see a down. You see what I'm saying? So all of a sudden, even though we can't predict from one candle to the next exactly what's going to happen just by looking at price alone, we can look at this RSI and it kind of tells us where the relative strength is in real time. All right. Now, what happens when the RSI reading is between 60 and 40%? Again, if it's above 60%, price is going to go up. If it's below 40%, price is going to go down. And so when it's between the two, that means generally that price is going to be going kind of sideways. All right. And so we can begin to make predictions with this. The second indicator that I want to introduce to you today is called the Bollinger Band. It's a very simple indicator. It represents this top line, this middle line, and this bottom line. All three of those combined represent what's called the Bollinger Band. And average line, that's what this little gray line is for, okay? That's what that represents. If they took all of these top peaks and they identified an average of those top peaks, that would represent this little red line on top. The same for the bottom. All of these bottom peaks, okay, they form an average line, and that's what this green line is. So over 98.3% of all price movement activity occurs between the top and the bottom Bollinger Band lines, okay? So what that gives us is we have a dynamic moving average, kind of a more of a band or a channel in which price will move in between, as well as an indicator to tell us whether or not the price is strong or weak and in which direction. So we then combine these two indicators to make a market prediction. So first market prediction. Let's just say that we want to identify opportunities where the market is going to go down, all right? So if price is kind of working its way up to this upper Bollinger Band, well, we know that price is likely going to turn around when it gets close to this band, when it touches it or when it gets close to it. So, but how do we know? How do we know it's not just going to continue to push up? Well, if we look down at the RSI, as long as this line is between 60 and 40%, we can have a pretty high level of confidence that the price is going to turn around and it's going to go back down. All right. So it really is that simple. And we can combine these with a concept called divergence. Now, this is kind of like reading waveforms. We do this with heart rhythms and so forth. And so let me introduce this basic concept to you. Reading divergence, and then I'm going to jump into the live charts to show you guys what this is. Divergence is when we have a discrepancy or a difference between what we are seeing in price wave movement versus what the RSI is telling us, okay? So listen to this closely. This is a very powerful concept. If you learn divergence, I promise you, you will win a very high percentage of your trades, okay? We have people submitting their flyers. In fact, I see Patty there. I know she submitted some information recently. We featured her recently. I recognize that face and that name. She's doing a fantastic job. Anybody can learn this, okay? So how divergence works is price moves in a direction and then pivots. In other words, it stops and starts going down. Why does it go down? We don't know, but what's important is just to note that it did. But once price moves back to that same level, okay, that's called a price retest. But what do we see in the RSI reading? Well, at this first peak, the RSI was very high. Again, this red dashed line represents 60%. So above that, this is closer to, say, 70%, all right? On the second price peak, when price came up to retest that same level, the RSI was no longer at 70%, but was down at 60%. It's at that moment that we would enter a put option. We do binary options here. And so a put option means we're predicting the price is going to go down. A call option means we're predicting the price is going to go up. So that 60% line would basically become our point of entry once price has retested. We also, so that's a double peak divergence. We also have a triple peak divergence, where we have 3 price peaks in a row, and then we compare the 3 RSI peaks. Note how this middle peak is taller or longer than the first peak. So in other words, price is going upward between first and second peak, but if we look at the RSI, the second peak is actually going down. This is what is referred to as divergence. Okay, the one is going up, the other is going away from that line. They're not in parallel, they are literally diverging from each other. So once that happens, and we see price reject again, in other words, going down, that gives us a clue that this third peak is about to form. It hasn't formed yet, but once we see these two and this divergence occur, it gives us a clue that this third peak will form. So as price makes its way back up, it's always lower or shorter than the second peak, and the RSI reading is then between 60% and 40%. So if it's a triple top peak like this, the RSI reading will be basically, the third one will be right at 60%. If this was in the inverse and we were seeing the 3 peaks downward, they would start at, down by 30%, maybe work their way to 35%, and then end up with the third peak being closer to 40%. And that would be our call option entry point. You see what I'm saying? So let's jump into the live charts and look at some actual data from today and see what we can see. All right. So right off the bat, I can see a divergence. All right. So this is gold. This works on any given pair. It doesn't have to be gold. But I'll show you a few examples on here. So here we can see that with gold, price was moving down and for some reason got rejected. We note that the RSI reading at that point was well below our 40% line. That's this green dashed line. What does that mean? When it's below 40%, downward strength, right? Above 60%, upward strength. So when it's down here, we don't want to be taking a call option thinking the price is going to go up, because what the RSI is actually telling us is that price is actually strongly going downward, right? Now price eventually turns around. That's why we see this rejection. But the big question is what will the RSI tell us when price, and if price gets back down to that same exact level? So we look at that price retest. Price came back down, and what do we see? RSI, in this case, has reduced. If we draw a line between this peak and that peak there, we have kind of a divergent line, all right? A reduction in strength. It's going closer to that 40%, and yet we have a flat bottom. That is known as divergence, suggesting that price is going to move in the upward direction. So that is a double peak divergence. Very powerful concept. These things happen all the time. Let me reset this here for you guys. All right, here is another example. Here's another double peak. These happen literally all day, every day. Price came down, got rejected, kind of fluttered around for a bit. what we're looking for is these pivot points, okay? When price got rejected at down here, I'll draw this kind of line, make that a little easier for you guys to see. When price got rejected, the big question is, when price gets back down to that point, what will the RSI be telling us? Well, the first time when price got in this zone before, RSI is below 40%. You see that? But the next time price got down to that same level, did it hang out there very long? You see this little line, that little wick there. Forgive me if this looks a little small. Let me zoom in. So hopefully you can see this a little bit better. Okay. So as price made its way back down to this same price level, the RSI at that moment was inside 40 and 60%. And what do we see? It immediately got rejected. All right. Now, when it comes to binary options, most of our trades start out as 3 minutes long. That means each of these candles on this particular 1 minute chart would be how we would count out kind of when that trade would expire. So if we entered our trade at that point, we see price come down to it, we enter a call option at that point. We say 1, 2, 3, price is above our entry point, we win that trade. Does that make sense? Okay, so we're looking for these kind of opportunities every single day, and we see them repeatedly. And so we can use essentially existing data from the first peak, and we just simply compare the second price peak data, which is right here. All right, this happens real time. It's not difficult to see, and we note that there is that divergence. Okay, so if you draw a line between those two peaks, you can see that the RSI is getting weaker in that downward strength, and yet we have a flat bottom price peak. Hopefully you guys can see that, and that makes sense. Okay, so let's look for some additional opportunities. I see another one. All right, and this is all just this morning as far as USA time. And some of these were my actual trades this morning. In fact, I'm not handpicking these, but just letting you know that these are great setups. Okay, so this one right here, price had come up. Note that the RSI is very high. What does that mean? That there's strong upward price strength. So do we want to take a put option in this range, predicting the price is going to go down? We don't yet. Why? Because we don't know when this is going to stop. This could really just keep going on forever for all we know. And so our goal is to not necessarily predict the future in the moment. We need past data in order to predict future outcomes. And so if we do that in this example, as price got rejected, we see that this becomes our first peak. Now, the question of whether or not it's going to get rejected if price happens to come up to that same level again will depend on what the RSI tells us. So in this example, price made its way back up here, and what do we see? RSI right at 60%. Now, in this particular case, I had to roll over my trade a couple times in order to give it time for price to move in the direction that I wanted it to go. But my reasoning for that was that the RSI stayed below that 60%. That supported the reasoning that price was not strong enough to break out to the upside and continue to go up. And that's what suggested that it was going to continue to go down. And you see that it eventually did that. Occasionally you see some of these kind of candles. That's just the way the market is on occasion. But the important lesson is to note the divergence. The first peak is here. Our second peak is there. Right at 60%, that's our money zone, between 60 and 40%. You see this over and over and over again. Now, let me just share with you a quick concept. Hopefully everybody can hear me. It said the internet was a little unstable. I want to convert this for you real quick into in monetary value. We always have to be careful not to make income claims and things like that. But I teach most of the individuals who participate in our sessions to risk anywhere between 1% and 5% of their account on any one trade. Now, if you have your normal retirement account, a lot of people are hoping to get 5% in a year. You see what I'm saying? They're going, man, if I could just get 5% return on my investment in an entire year, I'm feeling great, you know? And so let's think about this in monetary terms. Let's just say you've got even $1,000 in your trade account. all right? And let's say you risk 5%, you take a couple of these trades and you win. Now, the way the payouts work in binary options is typically they're paying you out anywhere from 70 to 85% of whatever you're putting on the line. So on $1,000, 5%, if we're risking 5%, that would be $50, right? So we place $50 on the line, and then our payout will be, let's just say 70% of that. So 70% of the $50 would be $35. You following me? And so that $35 is your payout. So let's just say you take 2 of those trade opportunities. How much have we made? 35 times 2, we made $70. $70 straight up. You just made 7% on your money in 2 very simple, easy to execute trades. How long did those trades last? An average of 3 minutes. Maybe in a situation like this, it might last 6 minutes, okay? So how many of you have ever made 7% on your retirement account in 3 to 6 minutes? It just doesn't happen, right? And so is this the lottery? Are we talking crazy here? No, this is what day traders do. Did you know that behind the scenes, this is what your banks do? This is exactly what your banks do. When you put in $1 into your bank account, your checking account, your savings account, and so forth, doesn't matter which account, your bank actually gets leverage. They can then take $100 for every $1 that's in your account, and they go invest it. Some of that money they give out in mortgages, car loans, CDs, those kind of things. But a large portion of that, they have professional traders and investors like myself who sit there and look at a chart, they execute these trades, and they'll make 3%, 5% in a given trade. And then at the end of the year, they say, here's your quarter of 1%. Hope you're happy with that, right? Doesn't that seem silly? And so I say that not to really bash on the banks, that's the nature of their business, but to illustrate that what we are talking about here is something that the banks do every single day of the year, and that you can now have the opportunity to participate in the investment process with your own money. And you don't have to have hundreds of thousands of dollars to start. You don't even have to have thousands of dollars to start. Many of our students begin with $100, $200, $300. It doesn't take a lot of money to start to make some ground, all right? And you can see with some of these setups, it's not that complicated. Yes, you might wait a little bit in order to see a good setup. In my training sessions that I do that we post on Boyd Pips that all of you guys can access at any given time, you can look and watch all of our training sessions. You can actually learn about all the other ways that we utilize just this RSI and these Bollinger Bands in order to identify multiple trade opportunities throughout the day at your leisure. Because the reality is right now it's 5:30 in the afternoon my time, but it might be the morning in your time, right? So we're on different time zones. Our time zones might not always coincide. And so you have to find a time that really works for you and your trading schedule. Maybe you work a full-time job. And so it's important for you to be able to go work that job. And then maybe you're going to trade a session that's in the evening your time, and that's okay. So the purpose of our training sessions each day, we teach about Cash Trap, which is what Matt Thayer uses. Some of you have probably been on his sessions. We also teach some additional information that you can use independent of those sessions. We want you to be independent. Okay, so one other strategy that I want to show you right now, and then we'll see how much time we have. I want to be sensitive to the amount of time. I know this call is somewhat limited. Okay, so another concept that I teach is what I refer to as a sniper move. Now, it has kind of a fun little name. Everybody loves a sniper, right? So basically what a sniper move is it's a simple one. It's a 2 indicator trade confirmation. We use our same Bollinger Band, same RSI. And all we do is we look for price to push beyond one or the other side of the Bollinger Band, such as here, such as there, such as here, such as here, here. We see this happen over and over again in the market. Now, how do we know which ones we can take and which ones we don't? All right. Generally speaking, as I taught you in the beginning, if the RSI is between 40 and 60%, that means the market's kind of going flat. You see that here. It's basically going sideways, right? So the sniper moves are when you have price moved beyond the perimeter of the Bollinger Band. I'll zoom in on this. Hopefully you guys can see this a little bit better. I'm going to delete all those. So such as in this example, price moves beyond the perimeter of the Bollinger Band. You see this little green line right there? Price went beyond that, but what do we see in the RSI? It's between 60 and 40%. That's the only rule. If you see price move beyond the Bollinger Band and the RSI reading is between 40 and 60, it doesn't have to be in the middle, just inside those two lines, that's a sniper move. So you can literally enter a call option at that moment, and you can see you get nice rejections every time. Some of these are not considered sniper moves when price moves beyond the Bollinger Band, even though, yes, it often does reverse. There's also times when it doesn't. So we want to weed out those trades that aren't going to win for you, right? So like in this example here, price pushed beyond the Bollinger Band, but we see that the RSI is beyond 60%. This is above 60%. So I don't take that trade. It's that simple. So if you're looking, you're saying, honey, looks like the candles are moving beyond the Bollinger Band. Should I take the trade? What is our answer? Well, is RSI between 40 and 60%? If it is, take the trade. Take a put option up there. But in this case, because it's beyond 60%, it's outside of the 60%, or if it was below 40%, or if it's on the downside, just don't take that trade. Okay, it's that simple. So down right there, okay, we see price push beyond the Bollinger Band. What is the RSI telling us in that moment? Right there, inside the 40 and the 60. We take a call option at that moment, boom, we win. Okay, each one of these candles is 1 minute on this particular chart. So you can clearly see 1, 2, 3 candles were clearly in the money. As long as price closes above our call option, that means we win the trade when the time expires. So if we're on a 3-minute trade, when that 3 minutes expires, as long as we're on the right side of the price, we win. Even if it's like a micro pip beyond it, we still win, okay? So let's look at the next one here. We have another price moving beyond the Bollinger Band. Where's the RSI? Between 40 and 60, another call option. Easy win. Price kind of hovers again. We don't know what it's going to do. We don't know what it's going to do. We're watching. Boom, price pushes down. Quick look at the RSI. What's the RSI doing? In between 40 and 60, take the call option. You preemptively jump on that move, and boom, you get a nice upward move. You see that? So right there, 1, 2, 3, 4. And how long did that take us? I've got a little measuring tool here on TradingView. We can actually look at how long that took. Okay, from that moment to this moment was 1 hour. This is 1 hour and 1 minute. In 1 hour, we can take 4 pretty much guaranteed winning trades. And if you're making, say, that $35, which is 3.5% of your $1,000 account on each of those, how much did we make on 4 trades? 3.5% times 4, we made 14%. You just did 14% on your account in an hour. Can you do this in any other way? And guys, I don't mean to sound hype-ish. I'm not trying to pump this up or make it something that it is not. But what I do want to emphasize is that you can do what you really just can't do through any other means. You could go buy real estate. You can make great money in real estate. People, President of the United States, Donald Trump, he made billions off real estate, right? But that doesn't mean that you can go and easily replicate that. Maybe you don't have the starting capital. Maybe you don't have the knowledge. But with this, you can start with a small amount of money in your own trading account, and you can learn the skill. You can participate in our training sessions where I teach you and repeat this and help you understand this, answer your questions to get you to the point where you can see how to take every single one of these good opportunities as well as weed out some of these bad opportunities. For example, here, right at the beginning right before our good trade there, we saw the price move beyond the Bollinger Band on this time, right? So is that our opportunity? Well, what does the RSI tell us? It's beyond the 60%, so we don't take that trade. We're weeding that out. Now, we could consider that trade for other reasons. Why? Because we happen to have some nice divergence here. If you look at this, we did happen to have some nice divergence, but if we're looking at a sniper move itself, we would not take that trade. And that's important. So in the beginning, when you're first starting out, you want to pick one strategy. I can teach you 10. you know, I kind of focused in on about 4 main ones that I teach my people, but mostly we're just using these 2 indicators, Bollinger Bands, RSI. If you learn how to read a tool well, you don't need 100 tools. You just need to know how to use these well. And that's what I can teach you, okay? And all right, so how are we doing on time, Brandon? I just want to be sensitive to, we're doing okay on time? All right, so here's another situation. So price moves beyond the Bollinger Band here. If we're looking at sniper move strategy, what are we seeing on the RSI? Well above 60%, so we don't take that trade. You can see price starts to move against you, right? We're only taking 3-minute trades, so we're looking at a few candles here. We don't want to take too, you know, we don't want to risk these kind of situations and lose a trade when we can just take this kind of trade and win every single time because the RSI supports that. So again, just to review real quick, what this line means when it's between 60 and 40% is that there is not a lot of directional strength. Price isn't moving strongly in the upward direction or the downward direction. And as a result, boy, we can just take those sniper moves at any time. Normally when people trade in the markets, what do they want? They hate this kind of time where the market's just moving flat, it's just moving sideways. Most people hate this kind of time. Why? Because they need a trend. They need the price to move up, right? And you've probably had people ask you, they say, oh, during the pandemic, during all this chaos, market's been up, it's been down. How are you doing in your trading? I just tell them, I'm doing fantastic. Because frankly, I don't care if the market's moving up, down, or sideways. It just doesn't matter. My strategies can take advantage of the market no matter what it's doing. But think about your investment accounts. Think about your retirement accounts. What did they do during this last pandemic crash? They probably went down. If your broker or if your financial advisor didn't pull your money out, your money probably went down in value. Why? Because brokers and not the brokers, but the financial advisors, they have one single strategy. And that is essentially that buy and hold on. And we hope that after 30 years that the value of your account is more than when you began. You want to know where that strategy came from? I'm going to show you guys real quick. I'm going to show you, it's called the US 30. This is the Dow Jones Industrial Average. And I'm going to go out to the monthly chart. All right. Now, these days, the Dow Jones goes up and down all the time. And if we look, each one of these candles represents a month on this particular chart. We can see the Dow Jones dropped significantly. It was almost up at 30,000 points, and it dropped right after the pandemic started and everything, almost down to 18,000 points. That's a pretty significant drop, and a lot of people got destroyed. They lost their savings, they lost their retirement, and anybody who was trying to retire this year, boy, they were hurting. Now, people can say, well, the market started to come back. Well, if those individuals held, then they're probably not quite as destroyed as they otherwise were. But the problem is that long term, most financial advisors and investors, they rely on time as their strategy. That's the whole strategy, just buy and then hold, okay? And they get this because if you look over time, if we go all the way back into the early 70s, here's our time right here. In the 1970s, we can see that the Dow kind of just started low and just slowly progressed upward. So all the way until 1999, basically the year 2000, it just sort of gradually went up. So you can see why they even came up with the strategy to just kind of buy and then just hold over time, right? Over that 30-year period of time, did people who bought in here, were they doing pretty good when they finally retired at this point? They're doing fantastic, right? But what about the people who bought in here in 1987, and then they wanted to retire, say in 2010, right? 2010, maybe they were still up a little bit, but boy, this drop just knocked their retirement account almost in half. And we saw that happen to a lot of people after that 2008 market crash. So, but you wanted to see something fun? Let me show you something. We're going to jump to the weekly chart here. Did you know that divergence that I just taught you predicted every single major market crash that's ever occurred? I'm going to show you right now because you probably don't believe me. All right, here we go. So here is 2007. You can see down here to 2009. This was one of the biggest financial market crashes in history. We went from over 14,000 points all the way down to 6,500. That's a big crash, okay? But what do we see? Remember I talked to you about double peak divergence, and we also talked about triple peak divergence. Well, at each of these major market pivot points, we see a triple peak divergence. I'm going to zoom in here so you guys can see this a little better. All right. So we're on a weekly time frame chart, so it means each one of these candles is a week. Price had been literally going up almost since 1970, right? So it comes up, and then also we get a big rejection. Price makes a higher middle peak at this point, right? So, but yet we see some divergence beginning. If we compare these peaks, what do we see? Higher RSI reading above 60%. This is closer to 74%, about there on the first one. The second one, though, you can see that the RSI went down, even though the price was going up. This was our first clue that something was stirring. Something was going to happen in the market. It had not happened yet, but yet the market, through just some simple technical indicators, actually gave us that clue. As price came back up, once that RSI is close to 60% on that third peak, you can see the price just continued to go down. And if we zoom back out a little bit on this, that continued to go down until, what did we see? A triple peak divergence in the opposite direction. Look at this. Okay, so because the big question is, okay, the market was crashing. Crash, crash, crash. Everybody's having a heart attack. And all of a sudden, at what point do we see that something might be brewing? At this point, we see that the RSI is well below 60%. On this lower price peak here, the RSI actually decreased. In other words, it went closer to 40%. The downward strength got weaker, if that makes sense. And so if we draw a line between these two, okay, we now start to see that divergence. Price is going lower, and yet the RSI is climbing. It's getting weaker in the downward direction. So that gives us the first clue that we're going to get a third peak, which we got. Price came right down here. I won't go into the use of the middle line for now just because of our limited time. But once again, we have our weak RSI between 60 and 40, and price began to move upward. So what do we see from there? Price continued to climb until the next major market pivot. We actually had another triple peak divergence there. You see it happen. Higher price peak on the middle, lower on the third, down, perfect divergence between the three peaks. There you go. It did it again right there, okay? There's our three peaks. Sorry, that's a little messy. And we have our nice divergence there. So at every single time that we've had these major market pivots, we had that sign. So let's zoom forward just for fun and look at what happened recently. Now, one might say, well, nobody could predict the major market crash that just happened this year, all right? Well, we're looking at this chart. What do we see? Price came up, got rejected down. So the big question is, the way we read divergence is if the price comes back up to that same level, is there a change in the RSI reading? Again, we're comparing past data to current data. That's how we're making our prediction. We're not just flipping a coin or making a guess. We're looking at past data, comparing it to current data to make our prediction. What do we see here? Here's our first peak. There's our second peak. Nice drop in the RSI. So equal price retest. Price came down, went exactly to the same height, right? And even though this doesn't look like a big dip, this is the weekly chart, so this is a lot of movement. That's going from 30,000 all the way down to like 28,000. So that's 20,000 pips, just to give you an idea. So we have a nice RSI divergence, and what do we get? The massive drop. So even amidst something that people would say is unpredictable as the pandemic, we still get divergence. The market always shows us what it's going to do, all right? So guys, this works on the high time frame charts. This works on the low time frame charts. We can go all the way down to the 1 minute chart or below, and we're going to see these same patterns happen over and over and over again. Okay, so this is live market conditions. We see this happen repeatedly. Now, how are we doing on time, Brandon? Okay. All right. So anyway, guys, so the point and the take-home message that I want you to learn from this brief session with me today is that there is a way to predict which direction the price will go. That big question that everybody has, which way is it going to go? We actually can make that prediction. And with binary options and using HFX, you can do that over a very short period of time, a 3-minute trade, a 6-minute trade, or so forth. And you don't have to know what these markets are going to do next week. You don't have to know. You don't even have to know what it's going to do this afternoon. We make very short-term, small predictions based on highly reliable technical indicators that are not based on anybody's opinion. It's objective data. Just as in medicine, you know, if a doctor looks at an EKG and looks at the heart waves, we can make predictions literally about what is happening to a person based on how these normal wave patterns change for a patient, okay? If you have an elevated ST segment, this portion here, if this begins to elevate, that tells us as a doctor that this person is having a heart attack. I didn't have to open up their chest. I didn't have to look at their tangible heart to know that that was occurring. I can simply sense the electronic rhythms of the heart and know if a person is having a heart attack. Similarly, in the markets, we simply look at the normal wave patterns of the market and we can begin to make those predictions. So my hope and my goal for you today is to hopefully build the belief that this can be done. I don't care if the individual is 10 years old. I don't care if you're 97 years old or 100 years old. You can learn how to do this, okay? Some of our most successful students are actually quite up there in time, all right? And they're doing it. And in fact, Brandon and I have a personal friend who's in the business, and I won't mention his name because I don't want to embarrass him, but he's not exactly the smartest guy around, okay? But he is killing it. He just submitted another thing today, 10-0. 10-0, 10 trades in a row. Can you believe that? Guys, anybody can learn this. If you'll just take the time, I was able to show you in just a couple minutes one simple pattern. And this isn't even the only thing that we teach our students, but through one simple pattern, if you're just a little patient, you just watch for it. When it happens, I tell you, you're going to win. You're going to win. And you can get trade results without risking all your money, without risking high percentages of your account. You can risk small amounts and be able to win over and over and over again. And I can show you in some of our later sessions how over time the compounding effect will work its magic. Matt Thayer, one of the educators who's been doing this for a while, he started with a $500 account. I won't give you the exact dollar amount that he's up to now, but in less than 2 years, the guy's made millions, okay? Brandon and I are also very successful with this. And so guys, you can do this. I can't make any specific income claims or promises because the regulators wouldn't like that. But I can tell you that you definitely can make money doing this. I went from being a very successful doctor to I do this full time. I left medicine to trade full time. This is the greatest decision I ever made. I had money before, but what I have now is quality of life. You see what I'm saying? And that's what most people are looking for. They say, oh, sure, it's nice to have money, but do you have the time to enjoy your money? Okay, you can buy the boat, but do you ever have a chance to go out and sail the boat? So guys, with that, I'm going to end right here. I want to make sure we have time to wrap up. And but great to be with you. I encourage you to get on our sessions. And even if it's during a time that you can't watch them live with us, go back on Boyd Pips, watch them in retrospect. You can get all the same information. You're not missing out trades. I actually don't do live trade signals on purpose because I want to teach you how to fish and not just hand you a fish. But with that, guys, I'll turn the time back over to you, Brandon, to take it away.
All right. Guys, if you got value out of that, put value inside the chat. There was actually a guy who was saying that. He said, Dr. Lee needs to do some live trades and send out signals. And Josh just said it right there. If we just do live trades and signals, why would people be a part of the company? They just quit their membership, right? That's what Go Live is for. What we're trying to teach you is how to actually fish, not just receive a fish. You know, you can give out signals all day. You can do live trades all day. But at the end of the day, if people don't learn how to master the skill, let's say he died tomorrow. Now, we hope that doesn't happen. If he died tomorrow, you're screwed, right? If the company went out of business tomorrow and you were reliant on Go Live, you're screwed. So that's why we want to teach you how to do this. You know, I mean, it's almost like the simplest analogy I can give. It'd be like, hey, I want to get muscle, but I want you to do all the sets. Let me get ripped, but you do the reps, right? I mean, that's what essentially people are saying is I want to get ripped, but I want you to do the reps. And so we're trying to show you that it's actually through the reps that you get that ongoing, quote, muscle, that financial muscle that we're all looking for. And so with that, what I'm going to do is, Gail, I'm going to go ahead and turn it back to you for any kind of closing thoughts that you have. Again, this was a call originally set up for New Zealand. We're super grateful to have you guys on. But what I'm going to do, Gail, is it looks like I'm going to make you the actual host. If you have any final words or questions or anything like that, feel free to bring them up. All right, Gail, and by the way, I did make you host, but make sure you unmute yourself. So Gail, right now you're muted. You have to unmute yourself. You see where it says you have the down at the bottom left, it says mute. Make sure to unmute yourself because you're the host now. If she can't, then I'll close it out. Nope. Okay. All right, guys. Well, the call's been recorded. For those who can't and have not been able to get on, we'll make sure and get out the recording. It was recorded to the cloud. We're super grateful that you guys have been able to get on today. Hopefully we brought you guys some value. We do these calls 5 days a week in the morning, our time in the USA. We do record them for those who can't jump on. Matthew Thayer will be on tonight on Go Live. Make sure and jump on that if you're able to. We have Millie Mills on Tuesdays and Thursday mornings as well. So there are different educators that will be on these sessions. You guys can jump on. So we appreciate you guys. Have a great, great evening. And we will see you at the top. Talk to you soon.
Hey, what's going on, everybody? Mayor Reyes here. Hope you enjoyed the video. If you did, send me a friend request on Facebook, follow me on Instagram, and subscribe to my YouTube channel for more content.